All right, let's get right into it. Today, we are breaking down the Q3 2025 earnings report from the pharma giant Bristol Myers Squibb.
Okay, so when a company this big jumps over 7% in just one day after earnings, you gotta ask, what's going on? We need to understand exactly why, so let's dive in.
So the big story here, it starts with a really clean beat. They beat on both the top and bottom lines, and not just by a little. They comfortably sailed past what Wall Street was expecting. It's what we call a classic beat and raise quarter. You can see the numbers right here. Revenue, it came in really strong at $12.22 billion, which is way ahead of the street. But honestly, the really crucial part, it's the earnings per share. They hit $1.63, a huge beat over the $1.51 consensus. That's a big margin.
And that 12-cent beat, that's not just a small detail. That's what really fired up the market and gave everyone a shot of confidence. It basically screams that management has a solid grip on the wheel, especially when you think about all the pressure they've been getting from their older drugs.
Okay, so how did they pull off such a strong beat? Well, if you look under the hood, it's really a tale of two completely different stories, two distinct portfolios inside the company.
So on one hand, you've got their new growth portfolio, and it is absolutely surging. We're talking up an impressive 18% year over year. That's more than enough to cover for the, totally expected 12% drop from their older drugs, the ones losing patent protection. This right here, this is the pivot investors have been waiting to see. And you can see this transition playing out perfectly in the revenue mix. The new stuff, the growth assets, they're now the clear majority of the company's revenue. This sends a huge signal that the pivot isn't just, happening, it's actually succeeding. And it feels like it's happening ahead of schedule. So what's behind all this growth? Well, it's just incredible demand for their key newer products. Just look at these numbers. Camzyos is up a whopping 89%. Their cell therapy Breyanzi is up 60%. Reblozyl, a super strong 37% growth. Heck, even the old workhorse Opdivo is still growing at a really healthy 7%. Amazing.
All right, so this strong quarter isn't just about the here and now. It's really about building confidence for what's next. So let's talk about that. Let's look at what management is saying, the deals they're making, and what's cooking in the R&D pipeline.
Because of this great performance, management felt confident enough to actually raise their full-year guidance. And they didn't just raise one thing. They raised it for both revenue and EPS. To the market, that is a huge bullish signal. It says, hey, this momentum we've got, it's here to stay.
And you could really hear this on the earnings call. The CEO, Chris Borner, his tone was just confident, very forward-looking. He kept hitting on words like continued execution and accelerating innovation. He was really trying to frame the whole story around delivering these game-changing medicines in the future. And speaking of the future, look at this move. BMS is acquiring a company called Orbital Therapeutics for its in-vivo CAR-T platform. So what the heck is that? Well, think of it this way. It's a super next-generation way to create off-the-shelf cell therapies. The cool part is they're actually engineered inside the patient's body. This could be a total game changer for how these things are made and how many people can get them.
So as we look ahead, the calendar is just packed. You've got the continued rollout of their new drugs, you've got some big data readouts coming in 2026, but the one you really need to circle on your calendar, the big one in the near term, is December 5th. That's the PDUFA date for Breyanzi. Basically, it's the FDA's decision day, and it's got priority review, which adds to the drama.
Okay, let's pull all of this together. So what's our take on the stock now? And maybe more importantly, is there a smart way to play these catalysts that are coming up? So here's our call. We are initiating coverage on Bristol Myers Squibb with an outperform rating. Why? Well, it comes down to three things. They are executing incredibly well commercially, their portfolio transition is not just working but accelerating, and that pipeline is just loaded with catalysts.
Which of course brings us to the big question, especially for those of you who are more active investors. How do you position yourself for that Breyanzi news coming on December 5th?
Okay, here's one idea to think about. The core thesis is that the market might be sleeping on this catalyst, underappreciating it. So a potential trade could be something like a bull call spread using options that expire in December. Now, this strategy lets you capture the upside if the FDA news is good, but, and this is key, it also defines your risk. You know exactly what you stand to lose. But you have to be really, really clear on this. It's a binary event. It's basically a yes or no from the FDA. If the decision is negative, you're probably looking at a major and maybe even a total loss on that options position. So, high risk.
And just a reminder, this is not financial advice.